Let's get right to our floor show. Trader, longtime Tesla bull, Ross Gerber of Gerber Kawasaki is joining us. Ross, let me get right to this. Have investors' expectations for Tesla run up too much right now? And how do investors avoid getting singed by, I don't know, any surprise, even a beat that isn't enough of a beat?
Yeah, we've seen that a lot with the stock market, also with like Netflix and, you report a great quarter and then the stock sells off. And so I think you have to look at the stock in the context of how it's performed over the last 30 days or 60 days. So if we get a sell off, it's a buying opportunity for investors. And that's been our strategy actually lately, is when stock reports great earnings and gets sold for no reason, we'll just buy it after earnings, and then they tend to rebound the next day.
I'm amazed at Tesla's stick-to-itiveness and its ability to have crashed right up against the shorts and blown past them year after year after year. And many of these people who still feel that they should be shorted say, you know what, it's just such a momentum name. It's so geeked up. But guess what? Doesn't matter. They're continuing to roll these things off the assembly line. Are they not at a record pace? But what is demand? What can you tell us about the demand for the Model Y and, more importantly, maybe the higher end Model S and the Plaid?
So the demand is unbelievable right now, and that's really awesome for Tesla. So it's really an issue of how many cars can they make, because the demand is unlimited at this point. Many of their so-called competitors have been unable to scale production. So as much as I'm excited about new EV players like Rivian and Lucid, neither has been able to actually make cars in any scalable amount. So we're super bullish on Tesla for good reason, because the cars are phenomenal. So that's what we're looking for in this quarter. Is Model S Plaid was for sale in the new refreshed Model S. So that should goose margins a little bit in the quarter. So we're optimistic that they'll beat on that and record deliveries. So the bottom line with Tesla is it's the most exciting large cap company in the world, and they're growing at 100% year over year and continue to grow.
Let's bring in Commonwealth Financial's Brad McMillan. He's got $232 billion in under management. Brad, I get that for the broader market, we've had a stellar start to earnings season, but one would think that all the inflation anxieties, supply chain snafus might neutralize some of that. Where's the tailwind we're getting from here? What is it, and how long can it last?
I think you're exactly right, Liz, because when you look back, these earnings are backward looking. These earnings go for the third quarter, and in July, we all thought the pandemic was over. Well, that's not the case, and in July, everybody was a lot more confident. So these earnings are great, but looking through that, things are going to start to slow down. We're going to see growth start to slow. We're seeing spending and earnings down, and I think there's going to be an adjustment back to normal in the fourth quarter. And I think that's why we got the recent weakness in the market. There's starting to be a sense that maybe it's not going to be as good going forward as it has been.
I've heard that year after year.
That's not what I'm seeing at all.
Go ahead,
That's
Ross.
not what I'm seeing at all. We're seeing enormous demand right now here in Los Angeles. I've never seen it in my life as busy. Every event is sold out. Every sports event is sold out. Every concert sold out. I have never seen demand like we expect the largest Christmas season in the history of Christmas. Even Santa Claus will have a supply chain problem when it comes to Christmas. So I've never been more bullish on the U.S. economy than I am right now. They print money, they give it to people, and they spend it. It's great.
But Brad, we know how dangerous inflation is, and it doesn't look like it is somehow transitory. I mean, we've said that for 9 months now on this show. How do you see it, and how do you see it affecting investor sentiment?
Well, first of all, let's look at inflation. Yeah, it's year on year, but it's settling in to be harder going forward, and the Fed is starting to react to that. When you look at wage growth, for example, that's staying high, and it's going to go higher when you look at the demographics. Yes. Something has changed there. We're going back, I think, to the 50s, where you're actually going to be able to have a single earner family, and that's great. But that doesn't do anything good for the labor force. So labor costs are going up. When you look at supplies, yeah, Santa's not going to have a supply chain problem, at least I really hope you're right. But what's it going to do to confidence when people can't get all the toys they want because they're sitting in a ship outside of LA?
Yeah,
it is
tough. It is tough.
Planes to...
Sorry, we got to run. Finish that thought, Brad.
We've got companies hiring planes to bring goods in. Right. That's not the sign of a healthy supply chain or an area where inflation is going to pull back.
Oh, yeah, it's a sick supply chain right now. Ross Gerber, Brad McMillan, great discussion. Check the Dow and the S&P. We are right there for all-time records. Can we close there? We've got 52 minutes left.